Hey everyone, welcome back to Corporate Dakota, the place where we decode the financial jargon and find out what's really going on behind the scenes. Today, we've got a filing from Vivos Therapeutics, Inc., and let's just say sometimes a press release can be a bit like a magician, making the important stuff vanish. It looks like Vivos Therapeutics is giving us an update on how they did in the second quarter of 2025 and what they're up to. This is what they call a Form 8K, which is like a company's way of saying something important just happened. It's not a regular update like some other reports they might file, but a special announcement. Vivos Therapeutics stock is traded on the Nasdaq Stock Market LLC under the symbol VOS. Now they're checking a box here that says they're an emerging growth company. Think of this as a company that's still growing and might not have all the same rules to follow as the really big old companies. They aren't using the extended deadline for new accounting rules, which basically means they're keeping up with the latest financial reporting standards as they come out. The main reason for this report is that on August 19th, Vivos Therapeutics put out a press release about their financial results for the second quarter, which ended on June 30th of 2025. This is typically where we get to see the actual numbers. This whole report is basically pointing us to a press release they issued. They're telling us, go read this press release for the juicy details. And they've attached it as Exhibit 99.1. It's important to remember that the information in this report, including that press release, isn't being treated as officially filed in the same way some other documents are, which means it doesn't carry the same legal weight for certain parts of the law. It's more of a heads up than a deep dive directly in this main document. And who signed off on this report? It's being signed by Bradford Amman, who holds the title of Chief Financial Officer. That's the person in charge of making sure the company's money stories add up. Now let's hit to the heart of it, the financial results. While this 8K doesn't contain the full financial statements within itself, it directs us to a press release, which is where companies often summarize their performance. Based on the date of the press release, August 19th, it's detailing their performance for the quarter ending in June. So what do these numbers typically tell us? Well, these reports are like a checkup for the company's health. They show us how much money the company is making, how much it's spending, and whether it's growing or shrinking. For Vivos Therapeutics, a company in the health sector, these numbers are even more critical as they reflect their ability to develop and bring products to market and manage their operations effectively. When a company like Vivos Therapeutics reports its earnings, we're usually looking for a few key things. First, revenue, which is the total money brought in from selling their products or services. Then we look at the cost of those sales. The difference between revenue and the cost of sales gives us the gross profit. After that, there are operating expenses like paying employees, marketing and research. Subtracting those from gross profit gives us operating income, which shows us how profitable the core business is. Finally, we look at the net income, which is what's left after all expenses, including taxes and interest, are paid. This is often called the bottom line. For Vivos Therapeutics, given it's in the therapeutic space, revenue growth is a major indicator of success. Are they selling more of their treatments, or are new treatments gaining traction? High revenue growth can signal strong market demand and effective sales strategies. However, we also need to see if this growth is translating into profit. Some young companies in this sector might prioritize growth over immediate profits, reinvesting heavily in research and development. That's not necessarily bad, but investors will be watching to see when that investment starts to pay off. We also need to consider the other side of the coin, expenses. In the biotech and therapeutics world, research and development costs can be enormous. If Vivos Therapeutics is showing high revenue but also very high R&D spending, it tells a story of a company investing in its future pipeline. But if those expenses are growing faster than revenue, it might be a red flag. We also look at selling, general and administrative expenses, the SG&A costs. If these are also ballooning, it could mean the company is not managing its operations efficiently. When we look at companies in this industry, we often compare them to their peers. How does Vivos Therapeutics' growth rate stack up against other companies developing similar therapies? Are they gaining market share or are they falling behind? The financial results released in that press release would give us the clues to answer these questions. For instance, if their revenue is up significantly, but a competitor's revenue is up even more, it might suggest Vivos is losing ground proportionally. Conversely, if their revenue is growing while competitors are stagnant, that's a strong positive signal. But it's not just about the current quarter. Warren Buffett famously looks at a company's performance over many years. Is there a trend of consistent improvement, or are the results erratic? A company that can show steady, predictable growth over time is often a more reliable investment than one with wild swings. In the volatile world of biotech, finding that stability can be challenging, but it's a sign of a robust business model. In the context of this filing, the key takeaway is that Vivos Therapeutics released their second quarter results and are pointing us to the press release for the detailed numbers. Without seeing that press release, it's hard to give you specific figures or analyze trends. However, the mere act of issuing this Form 8K means there was something significant enough to report beyond their regular scheduled filings. This often suggests updates on important business events, financial performance, or changes that could affect investors. The fact that they are an emerging growth company also means they might be in a phase of high investment and rapid development, which brings both opportunities and risks. So what's my take on this? This filing itself is more of a pointer, a notification that financial results are out. It's like the table of contents for a more detailed story that's been published elsewhere. The real analysis would come from digging into that press release. But the structure of this 8K tells us that Vivos Therapeutics is following the standard procedures for informing the public about their financial health. The focus on emerging growth company status suggests they are likely in a growth phase, which typically involves taking on more risk for potentially higher rewards. A key risk is always the successful development and commercialization of their therapeutic products, which can be a long and expensive process with no guarantee of success. An opportunity would be groundbreaking success in their field, capturing a significant market share and delivering life-changing treatments. Alright, that's our quick decode of this Vivos Therapeutics filing. To get the real meat, you'll want to find that press release. What are your thoughts on this type of filing and what it tells us about companies? Let us know in the comments below if you found this breakdown helpful. Hit that like button and make sure to subscribe for more insights into the corporate world. And remember, we have a fantastic community over on Discord, linked in the description, where we dive even deeper. Thanks for watching, and we'll see you on Helpful. Hit that like button and make sure to subscribe for more insights into the corporate world. And remember, we have a fantastic community over on Discord, linked in the description, where we dive even deeper. Thanks for watching, and we'll see you in the next one.